Dylan, thank you so much for coming on the show, man.
Rob, thanks for having me. I'm excited to dig into this.
Me too, man. So Dylan, you're still in college right now. You're only 20 years old, and you've built a big audience around Bitcoin. How did this start for you? I mean, you're showing like a new way for the youth, which I really appreciate, and it's great to see where this American dream type thing is turning into this. Oh, I want to go work in a cubicle for some company, and then here you are building your own consulting company, building this big audience around Bitcoin, working with Bitcoin Magazine. Like, how did this come to be?
Yeah, so I was kind of in high school, always a numbers guy, and just kind of decided to go into finance a little bit, or like economics. Just I guess like the quantitative side of business fascinated me. Just get like using numbers to get an edge, data. And so I went to the University of Vermont, like hometown kind of school. Stayed in state, saved some money, and studied business there for a year. And kind of in the background, I'm learning about the business cycle, how to invest, crypto generally, just kind of as a 18, 19-year-old kid, was something that like, I didn't really dig into too much at first, but it wasn't something that I rejected. Like there was no kind of baseline knowledge or like Keynesian economic indoctrination that I was going off of. So I was like, okay, like digital currency, like whatever that is, like, yeah, it makes sense. I mean, everything's digital. So but I kind of slowly started to dig in a little bit. Just kind of luckily found Bitcoin Twitter. I had a Twitter that I never used, and just these people kind of seemed like the smartest in the room. And I really started to learn right at the bottom of the bear market. So Bitcoin in the summer of 2019, I believe, went from 3K to 12K very very quickly, and I was like, whoa, I need to pay attention to this more. And so I started buying some, but really, didn't get like, I guess, orange pilled, if you want to call it that, until about the end of my freshman year of school. This is start of 2020. We get sent home. I'm learning more about the regular kind of like the legacy incumbent financial system every day. And then COVID happens. We get sent home. Have a lot of time in my hands. We're on Zoom calls with like my boomer economics professors, and I'm just ignoring all my homework and listening to podcasts all day, and like on Twitter, and I'm learning a bunch. And at the same time, the school that I'm paying for, this education, if you want to call it, I wasn't really learning much at all. And so I decided to drop out. I realized that the kind of the opportunity cost of everything, it kind of clicked for me in like April or May, was Bitcoin, and that I didn't know what career I was going to go into, or what, that I was going to get a job in the space later on. I mean, that was obviously a goal, but I picked up basically a construction job, manual labor job for our family company, and listened to podcasts like every day, doing electrical work for in the winter for like 8 or 9 months. And at the same time, I'm on Bitcoin Twitter and all of that. And lucky enough, a job arose out of that, just from kind of sharing my thoughts online, which is super cool. But yeah, I mean, I basically realized, hey, like this is the most valuable thing, and I need to accumulate as much as I can. And everything that kind of the legacy, university system was providing me was like the antithesis of that. It was, walled gardens of information. It felt like old information that wasn't very too useful to me, and it was not only costing me my money but my time. So I dropped out, and I guess here we are, almost 18 months later.
That was my next question I was going to ask you, so I'm glad you said that. I remember I was in a space with Will Clemente, and I was talking to him about college, and he was trying to give me like the reasonings why he's staying in college, and he was saying, well, I can network, and I can. I'm like, dude, you have over like 200,000 people following you, man. Like, what do you mean
Yeah.
networking? What are you gonna go network in the cafeteria or something? Like, what do you mean networking? This whole thing is this Twitter Spaces thing, and like how fast we're marketing in a way is like a complete like flipping the whole system upside down. I mean, college might have been a great thing prior to 2007 before the iPhone came out, but now that we're in this like rapid technological age, it's like the people who are taking the initiative like you are to go, you know what, I'm just going to do my own thing. I'm going to build my own audience, and I'm just going to drop out. I was going to ask you, because I ended up saying like, Will, are you going to drop out this year or next year? Like, what's going on with that? So I was going to be like, Dylan, so you're going to drop out this year or next year? And turns out you already have dropped out. So I mean, some people would say it's bad advice, but if you have passion and you have a drive and you're going in a certain direction, man, it's so awesome to hear, because what you're talking about is you're breaking it down in such a humble way, Dylan, where people are going to hear this and go, I'm in that position myself. Like, I'm working an electrical job. I'm doing this. I mean, when I first started things, I worked as a waiter, and then a collectibles dealer came in when I was waiting tables, and that's how I got into collectibles, was from learning from literally from being in my job. The serendipity of that environment got me the opportunity to do what I do now, and then build my own company and all of that. So it's like breaking it down for people in a real world scenario. That's the best thing you can do. And so when are you still working like jobs to accumulate more Bitcoin right now? Or are you just going full all in with Bitcoin Magazine, your own consulting company and everything? Because I was reading on you that you have your own consulting company as well that you're building right now. And I imagine that's going to do really well. Shoot, I might be even coming out and asking you about some things, because I'm looking to do some stuff with my business with Bitcoin.
Yeah, I mean, so basically, it was like I was the Bitcoin guy for a while with my friends and family. I guess like even though I wasn't fully orange pilled, I was talking about it all the time. Like, hey, like you need to get your hands on some of this. It's going to be worth a lot one day. And you know, I was still putting together the picture with the legacy system, and I didn't expect COVID to come, and I think it kind of expedited not only Bitcoin and the monetary system, but just like the digitization of everything by like 4 or 5 years. It just like, you know, that happened, and then everyone was sent home. Everyone goes on Zoom, right? Like all of this stuff, it just like expedited trends that were already occurring. But you know, I was that Bitcoin guy for like all of 2020 and some of 2019. And then the price started to go parabolic, and it was like, it was my social time, my family time, my free time. It wasn't just like a hobby anymore. And I was like, all right, well, I kind of, in respect for myself, I think I should, you know, I think I can provide something valuable to people with my understanding of this, and in kind of a multifaceted sense, whether that's storage or just how to think of it from a macroeconomic sense, or like, you know, any of it. I was like just down the rabbit hole all day with my free time. So we started up just a small thing with my buddy. From college, who also I got to drop out, and he's working with Bitcoin Magazine now, which is awesome. But yeah, we just like kind of small businesses like on the side, really anything Bitcoin related, we help out. So for the most part, yeah, I mean, I just do the stuff I'm doing with Bitcoin Magazine. I write the Deep Dive, which is like a newsletter about kind of global macroeconomic trends, on-chain analytics, and derivative markets. And it's all kind of around this thesis that Bitcoin is the apex predator of money, and it's in the middle of a monetization process. So like, you know, we'll say, hey, buy and hodl Bitcoin, and that's all you got to do, just stack sats. But if you want to understand what's, you know, why the market pumped or dumped 10% yesterday, here's what happened, here's the data. So that's more of my day-to-day today. You know, I definitely like respect and appreciate like manual labor jobs and all of that after doing it for 8 or 9 months, right? Like proof of work. And the crazy thing is, like, I was getting, you know, a little bit above minimum wage, but in Satoshis, I was earning more than almost more than I am today. So it's like, damn, like, you know, even if it wasn't the most respectable job or like white collar thing, like, you know, I was getting what some would consider like a extremely high wage if you're talking in Satoshi terms. So I
That's
mean,
what
all in
people
all,
need to
I have
hear,
no
though, bro.
regrets.
Like, they need to hear that. People need to hear exactly what you're saying right there, because everybody thinks like, oh, I'm not a millionaire, I don't have this right now, like I'm doing this and that. But that's not the way. The way is what you're doing right now. I mean, I think that the most valuable thing anybody can do in today's day and age is take 100% control of their time. If you take 100% control of your time and you own all 24 hours, you control how much you sleep, you control how much you study, you control how much you're working. That situation there was my key to success. I had a choice of an apartment or a warehouse, and I'm like, you know what? Or like it's an office building warehouse type thing. I'm like, you know what? I'm going to live in that warehouse, man. Like, I don't want to live in an apartment. I have high-speed internet there. I can build the shower there. Like, I can go to the gym if I want to shower too. Like, I'm going to go live in the warehouse. That was the best decision I ever made, because I had 100% control of my time, and I wasn't worried about paying for some car or paying for some, you know, apartment, some fancy place. When I took out those expenses and just had 100% control of my time, everything's just started growing, and you're able to research so much more, Dylan, than anybody else that might have to give up 9 hours at a time a day. If you have more of your time to dedicate, then obviously you're going to be able to research and provide way more value than somebody that's given up that time. One of the subjects I wanted to get into with you, we were talking about this in a Twitter space, and I saw your post on it because I was thinking it's going to be really hard to get these central banks to get involved into Bitcoin. But you brought up that it's going to happen from the commercial banks and then trickle up from there in a way. And I was curious, like, how do you see this rollout happening in Bitcoin right now with your studies? Like, do you see it kind of the banks being forced into this situation? Because we had talked about how with Zelle, for example, they didn't want Zelle to exist. They just got sick of the money going to Venmo and Cash App and all these other payment processors. So the banks were forced into it. And now we're seeing JP Morgan kind of being forced into Bitcoin in a way, even though Jamie Dimon is not a fan of Bitcoin. Now he's getting forced to provide Bitcoin because his clients are saying, hey, we want Bitcoin. So I'm just curious, like, how do you see that rollout happening, and why did you bring up that it's going to happen with the commercial banks? Because I think that's such a great point that you brought up the other day.
Yeah, I mean, one thing I would say is, like, by no means am I an expert in, like, banking regulation or all of that. I mean, I think I have a pretty good understanding of how the financial system works. And I think one of the things that most people don't understand is that, like, all money in circulation today, all fiat money is created at the commercial bank level. And so, like, the government, the Fed can print money and money printer go burr. I think I love that meme for, like, a kind of a red pill for normies, if you want to say, like, hey, they're printing your time, they're printing money. But in reality, like, the Fed can't print dollars, they can print bank reserves. And then for dollars to enter the economy, it has to be lent out by the commercial banks. And so the commercial banks create money, and essentially, and they can do this through unsecured lending, but a lot of the times it's through secured credit. So, like, you can buy a house, but how do you buy that house? Well, you put 20% down. The bank gives you the money. They create dollars through lending. They are actually creating money, the way that our fractional reserve system works, believe it or not. And then they have that collateral, the house, if you don't pay, to kind of take from you. And you're paying interest on that. So the commercial bank actually created money in that transaction. What money's destroyed because if you repay back the loan or you default, money's actually destroyed in that process. So all money is from commercial credit expansion, essentially. And so when you're thinking about Bitcoin and why a commercial bank would be interested in something that seems so, almost like the antithesis of what they're built upon, this uncorruptible, digital, decentralized currency, well, it's because it's the best form of collateral we've ever seen. And so it's liquid 24/7, 365. It's fungible. It's verifiable in the sense that you can look at the UTXO set and verify all ownership on the network. So collateral, like rehypothecation, is a huge problem in the banking system. It's actually one of the biggest reasons that 2008 was such a big blow up, was that there was so much contagion and contamination on these balance sheets across the banking sector. So when you're thinking about Bitcoin as collateral, like, for the most part, it's still isolated to, like, these niche apps or neobank Bitcoin services. But, I can take my Bitcoin today, and I haven't done this yet, but I can take my Bitcoin today and I can give it to Celsius or, Unchained Capital, if you want to just use them as an example, and they hold it, and I have, say, an LTV, loan to value of 50%. So I give them $2 and they give me $1 back. I can borrow at extremely low interest rates. And there's no credit risk for the bank, because if my Bitcoin draws down in value, like, Bitcoin is volatile, yes, but over collateralization fixes this. And so banks can lend with literally no credit risk whatsoever, because they can always liquidate your Bitcoin at any time. And so this is one of the things that, like, I think it's so early because, these services are still very, very niche, right? Like, Bitcoin's $1 trillion asset. It's going to be a $10 trillion asset at some point. I think it's going to be a lot bigger than that. But, the financialization of Bitcoin in that sense is a good thing. And all of these commercial banks are going to be incentivized to come in and provide these services because, again, there is no credit risk. And when you're looking at something like, junk bonds going for 4% yields before, inflation risk, before a chance of default, lending with collateralized Bitcoin is a no-brainer. And it's still really early in that sense.
Absolutely, man. The way you simplify it for the average individual to hear you, it's just it's such a mind-opening moment where it's like I've always said the best utility of Bitcoin is to be your own bank and have it in cold storage. If anybody says otherwise, they're suspect in a way. But the second best utility is to be able to get collateralized on your Bitcoin and use it as collateral to get a loan against your Bitcoin, never have to declare that capital gain, which is huge. People forget that. You could be the best trader in the world, but you're forgetting about the fact you're going to owe 40% to Uncle Sam. So if you take that out of the perspective and you realize, wait, I can keep buying this asset and then leverage this asset and then just get capital whenever I want capital against that. And the other thing too is like, say you want to get capital over in euros. Maybe in the future we're able to get go to a European bank and get lending over there and get euros immediately wired into wherever. You know, it's like it's this perfect instrument to use as collateral. And I appreciate how much you bring that up, but then also going into the detail of why it's a no-brainer specifically for the banks. Obviously, it's a no-brainer for us, but what you bring up is that it's a no-brainer for the banks.
Yeah, I mean, so if you think about just like lending rates today, right? Like there's people with fixed 30-year fixed rate loans at like, I know a couple people with like 2.5% fixed rate mortgages. And so like, and a lot of these people like sometimes are wealthy and they have multiple homes and none of them are paid off. And someone might be like, are you crazy? Why aren't you paying off your mortgage? And it's like, dude, I'm borrowing at 2.5%. So like essentially, when you're thinking about, there's the speculative attack has been brought up a lot. And that's the act of borrowing money to buy Bitcoin. And some people, if you said that to them, I borrowed money to buy Bitcoin, they'd be like, oh my gosh, that's so irresponsible. But that same person, if they have any Bitcoin and they have any sort of dollar liabilities, they're doing that. They're indirectly executing a speculative attack. You're choosing to not pay liabilities down on your balance sheet to hold a pristine asset on the other side. And so, for example, like it's a great idea, in my opinion, not financial advice, to either not pay principal off on your loan and only pay interest if you're paying 2.5%, and to buy Bitcoin. Or if you can, with a HELOC, home equity line of credit, borrow at a fixed rate for 10, 20 years into the future, and to buy Bitcoin, I think that's a great trade. And because okay, like what's Bitcoin? 60K. CAGR at 2.5%, 3% rate on that for 10 years. And what's the price? Like, I don't know off the top of my head, but maybe less than 100K, right? So you're betting that Bitcoin's not going to be 100K in 10 years. I'll take the other side of that bet. I'll take that any day. And so, I think when you're thinking about it from a banking perspective, what would you rather have as collateral, a house or Bitcoin? And the obvious answer is Bitcoin because of its fungibility, divisibility, liquidity, 24/7, 365. It's just a no-brainer. And the fact that you can't get a loan at Fed funds plus 25 basis points with your Bitcoin yet from a commercial bank just tells me like we're so early, because you can do that with your bonds. If you're at, if you have a Goldman account and you're like a private, rich individual with a bank account there, you can do this with your Tesla stock. You can do this with your S&P. You can do this with your treasury bonds, but there's no Bitcoin services. So so they'll all do it. They'll all come. But for now, it's still very, very early.
I think that these companies that are doing this, it's almost like I'd argue that I'd want to see you make your own company, because I want to see more Bitcoiners being involved in the lending services. Because the one thing I'm noticing with, say, Unchained, for example, they're the first one that's saying they're not going to locate the Bitcoin, where you can actually have one of the I think we're doing a multi-sig, so you can get one of the signatures or something like that, and you can verify that the Bitcoin's still in the same account or something along those lines. So like, how do you see that process becoming trustworthy enough for you to use it? Because right now I've done lending, like again, with friends. Like I've had friends of mine in the business that are like, mail me a cold storage sort of thing, and I'll give you a loan against your cold storage of what's in there and whatnot. So I've done it in that way where we both trust each other. But like when you're using an actual bank, or if you're using it like some service, what do you want to see them do specifically, Dylan, that you go, okay, now I trust them to lend out my Bitcoin from cold storage here, and because that's it's like our baby, you don't want to lend it out, it's like, it's once you have it in cold storage, it feels so right. But just curious what you would see that would make you be comfortable.
Yeah. So, I mean, that's a great point. These options are available to basically like all, anyone in the US. Actually, we're in my state, Vermont. There's a lot of like kind of regulatory, like, hoops to jump through, and it's just a small state. So like they don't provide a lot of this stuff, which is fine for now. But like I would use an Unchained, because even them, like Unchained offers like 10%, 9% APR to loan against your Bitcoin. And so you put it, they put it in a multi-sig, and they give you a key, so you can't move it. It's a 2 of 3 multi-sig. So, but they show you, hey, here's the address. You can throw it in a block explorer and watch it never move. And then also as the Bitcoin appreciates, you become increasingly over collateralized, the opposite of when it depreciates and you're getting close to a liquidation level. Well, if it appreciates by a factor of 10, you can draw off that extra collateral if you want. And so like that's one of the things that a lot of lending services don't do. which is really advantageous. And funny enough, I went up to the guys at Unchained and I was like, hey, I don't know like too much of the details here, but why 9-10% APR? Like why, this is a no loss business. Why aren't you doing 2%, 3%? You'd bring in so much more business. And they said, hey, we're on a Bitcoin standard. So, we're lending you money and instead of buying Bitcoin ourselves. So, and they work with like NYDIG and they work with, and NYDIG is like, in the Wall Street system, right? So NYDIG is happy to provide on-chain liquidity and invest in them and give them funds for their lending products, probably at 5 or 6% or whatever. But Unchained was like, hey, like we're not on the fiat rates, we're on the Bitcoin rates, and so I think more products will come that will do the kind of the Unchained capital thing where they say, hey, we're not hypothecating it. Here's verifiable proof. And that would make me like very comfortable as a lender. But ultimately, I mean, that's kind of my plan. It's to never sell Bitcoin. And to like, I think the end goal is for any individual or any business is like, you better like, I hope the dollar doesn't die away or die away tomorrow, next year, next 10 years, because there's a lot of money to be made. There's a lot of, opportunity there to be made in the process where every time Bitcoin draws down 50, 60%, I'm going to lever up with a proportion of my stack. And whether I spend that, invest that, buy more Bitcoin, who knows? But there's a lot of opportunity to be made with the volatility and the upside of Bitcoin against fiat, right? We're shorting fiat and never covering by buying Bitcoin and throwing it to cold storage. But you can also additionally short Bitcoin on top of that with these collateralized loans. And I think that's something where, you don't want to overexpose yourself, obviously, because to be right on the thesis, have an understanding of it, and then to lose everything because you were over levered is tragic. So, obviously never go too deep, but 10, 20% of your stack with a comfortable loan to value ratio. Like for me, when Bitcoin is at 30K, I couldn't I can collateralize because of kind of my jurisdiction, but like I did sell some Bitcoin for a loss. So I guess maybe I lied about not selling Bitcoin, but I did sell some Bitcoin for a loss, and I bought some call options as kind of like synthetic leverage because of like, I think that anytime Bitcoin draws down 50, 60%, it's advantageous. So, there's certain things like I don't plan on selling a top. I can't top tick this. I don't think, and I think if you try to, you're going to be paying those capital gains, and it's just kind of not a losing game, but the odds aren't in your favor, and you sell and Bitcoin pumps 50%, right? But you can time and do some really, really high risk reward bets. I think near local bottoms.
Awesome. Yeah, it's you bring up a couple really good points there, and so basically what Dylan is saying here is with Unchained, for example, because they're not rehypothecating your Bitcoin and not kind of playing the Ponzi scheme stuff behind the scenes and moving the Bitcoin around, they charge a higher interest on your capital. So say you had hypothetically, you had $1 million in Bitcoin, you wanted a loan against it. They might give you 500K against the million, but they're going to charge you a 10% or 9% interest rate, whereas another company might be charging 4%. The reason why they're charging more money for their interest rate is because they're not moving that Bitcoin around and making money off of your Bitcoin like these banks do. Some other companies, what they'll do is they'll take in your Bitcoin and then they rehypothecate it and they go, okay, well, we'll take your Bitcoin, we'll give you a loan against it, but then they get full advantage to do whatever they want, moving your Bitcoin around, trading with it, rehypothecating it in whatever way they deem fit to make money off of your Bitcoin. So it's worth paying extra on the interest so that that money is not being, that Bitcoin is not being moved around behind the scenes. I think exactly. I'm in the same position where I would want to pay that extra. And I think it's only like going to be an extra 3-4% right now, because the most competitive rates I'm seeing somewhere around like 6%, 7% in like BlockFi. And I mean, it's had some sketchy things happen. I don't like to bash on a company or something, but it's the way the CEO is like, oh, whoops, it happens. It's like, wait a minute. No, it doesn't just happen. What do you mean? Like, there's like so many, there's so many things. Yeah. I had so many questions when he's like, yeah, we accidentally sent out a bunch of Bitcoin to these different addresses and stuff. Like, wait, whoa. I like the idea that Unchained is not rehypothecating the Bitcoin, and I'm excited to see and I wanted to ask that to you as the next question is, how do you see that getting competitive? Because Unchained is going to get competition, and then that company is going to get competition, and eventually the rates are going to go down further and further and further to the point where they might get to that 2%, 3% rate that you're talking about.
Yeah, I fully expect that, and I think that's almost like the Trojan horse that Bitcoin kind of provides. Is that one, you're going to see this Bitcoin as collateral, and you're going to see this kind of entrench itself into the fake risk-free rates of the current system. And then on top of this, not so much in the US, we have the CME, which is cash settled, but there is a global market for Bitcoin futures that settle on chain with, if you want to call it physical Bitcoin, which I also kind of suspect will almost blow up the fake risk-free rates, if you want to think of it as risk-free, or like the fake cost of capital in the legacy system, where the treasury bond is at, or the 10 years at 1.5 or 2% or whatever it is trading at today. I mean, I follow it, but not too closely. And that's with inflation at 5 or 6%, and that's again with the shitty CPI metric, which I think is a total lie. So you have the cost of capital in the legacy system currently is deeply negative. And then so what else do you have? You have this Bitcoin, you have this pristine asset that no one can control, that no one can manipulate. If you want to, people say, oh, it's manipulated. No, that's real buying and selling. That's a free market. I think it's the only free market we have left. And now you have this futures market that's trading. I can buy Bitcoin in March of 2022 at a price right now, and someone has to promise me to deliver that, and I can settle that on chain. Is there some counterparty risk with the derivative exchange? Yes, but there's so much competition there that like naturally, this stuff will all play out. And I think the risk is not the same risk as it was with Mt. Gox in 2013. So we have Bitcoin as collateral, and we have a on-chain physically settled futures market. And so as Bitcoin becomes more and more financialized in the legacy system, you're going to see that, hey, wait, I can take this Bitcoin thing and I don't want to sell it, but someone on Wall Street might say, hey, I'm going to sell the futures contract 18 months from now. I'm going to buy spot and I'm going to get 25% APR. And it's risk-free. I'm market neutral and I'm getting 25%. And what's the treasury bill yielding me? Nothing. And so
losing me money.
I think that's where the futures market, Bitcoin's $1 trillion asset. The futures market is 25 billion. It's still tiny. Like liquidity is like it's huge for crypto, but for the legacy market, like just the treasury market's 30 trillion. The bond market's a couple hundred trillion, depending on who you ask. So there's so much capital out there, and Bitcoin's still really, really tiny. But as Bitcoin appreciates by an order of magnitude, and it's a $5 and $10 trillion asset, what happens to these yields? What happens to this cost of capital as these two things are like, it's almost like an immovable object, this like immutable chain of truth, and like free market going up against this fake manipulated market. And I think we'll see fireworks in the sense that Bitcoin will almost like a black hole, like siphon all of this monetary energy or value out of the legacy system and enforce truth upon global financial markets.
Totally agree with you. I totally agree with you. It's one of the things that I get worried about with this ETF rollout and everything, all this news on this is with precious metals. We've had this situation where they falsely keep metals prices down by shorting with paper contracts and using these ETFs to their advantage. For example, like SLV, what's crazy, this is a really fun thing to research. SLV is a silver ETF, but the custodian is none other than Jamie Dimon at JP Morgan. So you have JP Morgan Chase has been caught multiple times for manipulation of precious metals specifically and settled outside of court for felony accounts of manipulation in the precious metals market, and yet they're the custodian of the silver right now with the ETF that is in the US, the biggest ETF in the US, SLV. People say PSLV is a better one, which is a Canadian-based one, etc. And I imagine that these ETF rollouts with Bitcoin, it seems like the whole Bitcoin Twitter community is like up in arms about it. They don't know whether to accept it, whether not to accept it. I tend to take the side of, like, say, British HODL brings up that it's going to be a positive. It's also a lot harder to manipulate Bitcoin than it is to manipulate a physical item like silver or gold. Excuse me, but I'm curious what your thoughts are on the ETF, on how it rolls out. Is it going to be a positive? I mean, it makes it so that the institutions can get in and get some more comfortable, but at the same time, it's getting people confused that this is an extremely easy asset to actually own yourself. And it makes it so it goes like, oh, well, I can easily buy this. I don't know about this cold storage thing, but they might not learn cold storage, but it's so easy to do cold storage. So I'm conflicted about it. Like, how do you feel about this rollout of the ETF and what it will do to the marketplace?
Yeah, I think it's a net benefit. For us retail, it's like, we can download an app, download Coinbase, download Cash App, buy Bitcoin, and like we can hold it there, and it's pretty easy to like learn self-custody or just send it somewhere. But when you're thinking about like public capital markets and institutions and all of this, they can't download Coinbase or Cash App. Obviously a spot ETF would be optimal, but I think from a side of just like bullish or bearish, I would say it's a net benefit. And here's why: is that there's been, I think, $2 billion of net inflows into the CME futures. So one, it's not physical or on-chain Bitcoin, but what it does is it kind of gives this futures curve a premium. So CME is cash settled. You can't use Bitcoin as collateral like you can with all these other derivative exchanges, and you can't get Bitcoin out. So CME kind of sets this market price, and the futures traders kind of bid it up or down. But I think ultimately is because you have on-chain, kind of physically settled. I say I keep saying like physically with, these like asterisks, because it's not physical in nature, but on-chain. You have these futures markets that are on-chain around the world. So, kind of early in the year, you saw this like annualized basis between the futures and the spot hit crazy levels. In April, it was like 45% on like Deribit, BitMEX, Binance. So what that means is I can sell the December futures contract back in April, 8 months away, and buy spot, and I collect a 45% annualized premium. That basically guaranteed by just sitting and doing nothing. And so, but you saw CME trade at not those levels, at like maybe 20, 25%. And so what that's telling me is that if there ever was some kind of, manipulation or funny business going on with CME or paper markets, there would be a clear dichotomy between what's actually happening on chain and in spot markets, in a Deribit, a Binance, an FTX, where I can say, okay, yeah, this futures contract, I'm going to sell it or I'm going to buy it, but I have to escrow that Bitcoin. I have to lock it up. They don't let you under collateralize, and they have a Bitcoin wallet that you can send or withdraw from. And so, any sort of manipulation in the paper gold market, well, the price moves up or down. I can't demand physical settlement of my gold in 10 minutes. Right? I can't do it. With Bitcoin, you can. And so I think there's always going to be truth there. And for the most part, right, with these net inflows and the CME basis, this annualized spread, actually, since the ETF approval, has been bid up. So what does it do? The spread was like kind of oscillating from like 0% to 5 or 6% for the months previous in the summer. And now with this ETF approval, people started to front run it. And once it got approved, this basis is like now like 15 or 20%. So what does that mean? It means if I'm a Wall Street allocator and I have some kind of reliable spot instrument, which they really don't, but it could be GBTC, maybe it's MicroStrategy, maybe it's, some other sort of Bitcoin exposure, but I can sell this futures and I can buy some spot Bitcoin exposure, and I can capture this 15 or 16% yield. So on a net, it actually is attracting capital. When someone bids up the futures curve, it incentivizes someone to come in and arbitrage this. So I think it's a pretty bad product for just Bitcoin exposure, right? Because even if I think Bitcoin 10X is, right? So if you hold this futures ETF, you're going to do well. Like, you're going to do well in dollar terms. But against Bitcoin, you're going to bleed out, because you have to roll this futures curve over every single month. And because Bitcoin mostly trades at a premium, this contango, which was a big trend earlier in the year, got a lot of attention, but you're going to bleed out against Bitcoin every single month. So, I think it's a net benefit. A lot of boomer capital has been getting and is going to get exposure through this. But it's not optimal for the average retail pleb. You should learn how to hold your own keys and self-custody.
I love that term, boomer capital. If you're boomer capital, they're going to be using these ETFs. And I think it's a great point you bring up with like GBTC and stuff, the fact they're taking 2% year over year in fees, so that's probably why they have a negative premium on them, because it's on their Bitcoin, because it's like, okay, well, over 10 years, I have to give you 20%. Which is probably nothing in the grand scheme of things, but still you're paying somebody to be the custodian. And the way I could relate in metals is sometimes you have to pay a depository in metals, where like if somebody's holding your silver, you have to pay them 1-2% to hold the metal, and you're trusting them as a custodian. In this, so like the whole idea of like, who is your custodian, who actually owns the asset, that stuff is like really close to me. And that's if somebody's watching this, I think we all say learn cold storage, learn how to have self custody. But if you're boomer capital, this is a net positive for you in the marketplace with the ETFs and everything. I wanted to ask you, like, this is going to sound like a very simple question, but you're Bitcoin only. I'm Bitcoin only. There is no others. There is no second best, you know, as Michael Saylor would put. What made you realize yourself specifically, like, only Bitcoin? And as you move forward with all these rollouts, I mean, what's crazy in metals, I'm hearing people, did you see Shiba Inu's gains though? I mean, I saw some threads with you actually. It's like, and it's annoying to see what you had brought this up, that it's like Coinbase is targeting crypto individuals. We see it as crypto asset, Bitcoin, only Bitcoin, but they're starting to market this and go, yeah, get into Shiba Inu or get into Dogecoin here at Coinbase. So I kind of wanted to get your perspective on it. Why Bitcoin only, and why does this bother you to see that they're targeting people that are interested in crypto with these kind of ridiculous coins?
Yeah, it's something that took me, like, to build my conviction around Bitcoin and Bitcoin only. I mean, luckily I didn't have an altcoin or shitcoin phase, but to really kind of truly understand why Bitcoin was the innovation took some time. My conviction wasn't forged overnight, but essentially I guess I kind of realized through my research that there was a huge problem in the world. And it was that the money, the cost of capital, basically how the economic machine, the system works, was a lie. It was a fabricated lie. It was artificially manipulated and distorted. So this problem out there was a 300, 400 trillion dollar, maybe bigger problem. And that, there's all these second and third order effects when Bitcoiners say these things like fix the money, fix the world, or like Bitcoin fixes this, to something that's like seemingly unrelated. A lot of people get up in arms and they're like, these guys are crazy, these laser-eyed weirdos on Twitter. But like what I came to realize was that Bitcoin with Satoshi kind of airdropping this engineering solution onto the world in 2009 connected the physical and digital realm through decentralized time stamping and proof of work and the difficulty adjustment. And it was almost this one-off thing, this path dependent thing that now it can't, a fair launch proof of work cryptocurrency can't be replicated. And so all these altcoins, Ethereum, Solana, Shiba, whatever Dogecoin, like it's, yes, I know people personally that have become spectacularly wealthy off of a lot of these alts, and I'm not upset about it. Like I'm not upset that I didn't buy Shiba Inu or like upset at anybody else because they did. I'm just upset when, I've talked to a family member about, hey man, you should really just save a little Bitcoin for yourself every day. You bust your ass. Just buy some every week and sit on it for a decade. I promise you'll be a happy man. And they come up to me and go, yo, my friend's rich off Shiba. They made $2,000. And it's like, it's really frustrating because there's such a distinction between Bitcoin and everything else in terms of what it means, its staying power, its security. Like a lot of these things, when you're just looking at tickers on Coinbase, right? You don't see that there's protocol risk. You don't know that this Bitcoin protocol has been looked at by millions of eyes for 10 years straight, and it's basically nuclear grade cryptography. Nobody can touch it. And that a lot of these other things are just computer science experiments, and that's fine, right? Like, if you want to spin up a token and trade it on a basically a centralized server SQL database and call it a blockchain, that's fine. But I'm not going to allocate capital to that. I don't trust myself to go into a coma for 10 years and come out and have my value preserved. And I know with Bitcoin, like essentially my thesis kind of boils down to, like, I know it's a mathematical certainty, it's a game theoretic certainty that Bitcoin becomes harder to produce. A marginal unit of Bitcoin, Satoshi, is going to become exponentially harder to produce basically forever. And so I want to store my wealth in that thing. What's the one thing that's going to be guaranteed to become harder and harder to produce in 10 years from now, in a decade, in 5 decades? There's really not many things I'm confident in except Bitcoin. And so because of, I can store my wealth in my head, I can allocate all my capital, I can go to any jurisdiction on the planet. It's a no-brainer for me. And a lot of crypto, yes, they're like, Bitcoin's not going to pump 45% in a day, at least, today. Because of just how big and how liquid it is. And it's just a massive size. But yeah, Shiba Inu or whatever the third dog coin is might, but it's also gonna go to zero, right? It's gonna trend to zero over time. So I would rather, instead of gambling or speculating or, hopping from Ponzi to Ponzi, I'm just going to save money. And like, I'm going to let it work itself out, because I know, over the long term, your GME calls or Shiba Inu gains or whatever, like after you pay taxes, after one of them dumps 80%, like you're probably it's very unlikely that you outperform me sitting and hodling for a decade. And so I'm just kind of at peace with that. I'm just stacking every day and just, letting people have their fun. But it's unfortunate to see a lot of people that don't have money to lose, dump their life savings into, like, how many people bought Dogecoin after Saturday Night Live, right? That was the top. Elon goes out, Dogecoin, it's so funny. Yeah. And everyone's like, everybody's a winner until they're not. And there will be a lot of people that hold the bag. And so like, Bitcoin, a lot of these altcoins, it's zero sum, right? Your liquidity, your buy side liquidity is my sell side liquidity. And I'm cashing out my 100x. Well, Bitcoin's not zero sum. It's not. Everybody that buys into Bitcoin and stores their monetary energy on the Bitcoin network, well, it benefits everybody, and eventually it's going to be a global game. It's going to be a global positive sum game. And so like Shiba Inu is zero sum. You're buying it at someone else's exit liquidity, and so that's how I look at it, and that's kind of why I'm at peace with just chilling and stacking sats.
You nailed it. You nailed it. It's like, and the other thing about Dogecoin too, it's like, okay, that was the people's money. They don't know about the Lightning Network because that completely invalidates 99% of these altcoins anyway. But I'd recommend looking into the Lightning Network if you believe it's going to be the people's money, so to speak, and then realizing that if you denominate Bitcoin in Satoshis, it's less than a cent a Satoshi, So that's the true unit of measure that we need to be going by, and looking into the Lightning Network. But what's crazy to me, it's like, okay, well, Ethereum was the perfect place to do these, JPEGs and these, NFTs and whatnot. And then all of a sudden Solana came out, and then they have a competitor, and then they have Cardano now, and they have all these competition going on. So they're not number one. They're not the best at something anymore. Now there's something, trying to eat away at that. Not only that, but now they're clogging up their system, so it costs way more in gas fees now, which used to be the thing against Bitcoin. Oh, Bitcoin's so expensive.
Rob, have you ever used Ethereum? Have you ever used Ethereum?
I haven't. I've played. Actually, no. That's wrong. I should say I haven't, because now it's so much different than it was like a year ago when I was first learning and like playing around with stuff in cold storage. I was looking into like the gas fees and everything, but now from what I'm hearing, it's like a completely different animal of just being almost impossible to like send around in a way where it's just not ever going to have any monetary purpose for it.
It's unbelievable. The whole Ethereum bank the unbank, like there's literally one of the biggest Ethereum podcast promoters. It's like bankless, and it's like, oh, the next era of financial systems empowering the world. And it's like, no, if you want to send Ethereum from address to address or do a token swap, it's like right now it's like $250 in gas fees. Like this is for like whales that have had, have thousands of Ethereum, have millions of, maybe billions of dollars. Or like they can play the DeFi games, and they can, swap their Ponzi tokens and eat a $500 gas fee from minting an NFT or whatever. But the reason that like Solana and Binance Smart Chain and whatever the next smart contract, like, Tron or whatever, the reason is because like these things can't scale. They're like blockchains do have, there is a throughput there that basically doesn't allow this stuff to scale. So with Bitcoin, when the fees are super, super expensive, and incentivizes more miners to come on to capture this fee, what it does is, and then the difficulty adjusts upwards, blocks come in fast, the network's more secure, it incentivizes more people to basically store their value on this secure monetary network, and it's a feedback loop. With these other chains, it basically is the opposite, where it incentivizes you to build just a more centralized, a faster version of the kind of the same thing. So the spinoff, like, there's now CryptoPunks on Solana because, there's like so many people that wanted to buy NFT JPEGs, and they're like, hey, like I can't afford this gas fee because Ethereum can't scale. Blockchains aren't very scalable. Bitcoin does one thing, and it does it one thing extremely well. It's store and transfer value across time and space. That's what the Bitcoin blockchain does. When you add all of these layers on top, but not on top on additional layers into the base layer, smart contracts, all of this other stuff, when they say like, oh, it's the best, most, the best utility blockchain or whatever, like people that like fundamentally don't understand how blockchains scale. And so that's what I've kind of like, I used Ethereum. I was like, hey, I've read a lot about it. Let me try it out. So I took $1,000. I bought Ethereum. I was like, all right, let me try this. Let me try a DeFi product. Like I've been talking bad about it. I've said it doesn't work. I've said this, $1,000. Is that a lot of money? No. Could I have put a lot more? Yeah. But I was like, all right, so I'll try to borrow some stable coins with a DeFi protocol. Like DeFi is the new wave. And just to send money from my ETH wallet to a DeFi protocol costs $255 in gas fees. I'm like, all right, so that is not usable. So like with Bitcoin, right? Like I can send money anywhere and with basically instant finality, right? Maybe a 10-minute block time. But there's, like 100% assurance of final settlement right now for like a buck or two. And when fees spike, I can do it on Lightning instantaneously for like nothing. So, I mean, fundamentally, I think the whole conversation between ETH and Bitcoin or Solana and like it's Bitcoin and then everything else, like there's not really a competition, but because you have platforms like Coinbase, right? There's Bitcoin, Ethereum, Solana, Shiba, Cosmo, whatever the million shitcoins they have on there, people are like, oh, cryptocurrency. I get a lot of questions. You're the crypto guy. Yeah, but no, I'm not. I mean, like have fun with your chain link, but like it doesn't solve the biggest problem in the world today, which I know Bitcoin does. So like I'm just gonna wait for all the noise to kind of filter out, and like I understand the thesis behind this thing, and I'm just gonna let it play out. And like if you make a 10x gain on your shitcoin, like congrats. But long term, they're not competing against each other in any sort of way, despite all the narratives. And I know most of these things are going to go to zero, and that's cool. Build fast and break things is great, and like I encourage you to do it. But the next Bitcoin is Bitcoin itself. There's no next Bitcoin.
Absolutely. It's like it's almost like the people forget that the problem is not that complicated. The problem is we just need sound money. It's the solution that's complicated, and Bitcoin is the solution that we need sound money in the digital realm. So it's like I always like to say, the problem, not very complicated to have a closed loop system that is sound money. The solution, though, Bitcoin of being super complicated, solves that simple problem. And now it's people trying to find the next self-driving lawnmower for an app on an iPhone of this next, you know what I mean? It's like the craziest things
on a blockchain.
Yeah, and then like you got Dogecoin was the, the people's money, low price, but people don't realize that the market cap was getting up there. I believe the market cap was almost 90 billion when it was at the top of the SNL thing. So it's like we have a market cap of 90 billion, but yeah, it's only 75 cents. Yeah, it's only 75 cents because there's a bajillion tokens out there. That's why it's so cheap. But if you denominated Bitcoin in Satoshis, people would realize, yeah, we can make it a penny stock look too. You can change that unit bias real quick if these exchanges denominate in Satoshis, which I argue that they will once it gets to like 1 cent a Satoshi, and it might even get out there before then. And 1 cent a Satoshi is $1 million Bitcoin. So it just shows how divisible Bitcoin really is. But the fact, I guess the biggest thing for me was when I made a node and I synced a node up. And I saw like I watched it syncing over like a week and a half, and I went and did like it was like 700,000 plus blocks to sync the whole node. And I realized, okay, if it took this long to sync this, and then now anyone can have the whole protocol of Bitcoin, every transaction synced, and it secures that protocol. And then you look at that chart. I'm sure you've seen it, the chart of nodes that are just blowing up everywhere. And you're like, wait, that's how these are growing so fast. I have not really that much technological expertise compared to somebody else, in Bitcoin. And I figured out how to do not only a my node, but also an umbrel too. I did one of each just to see how they both worked, and seeing a node get developed and then realizing, wait, it's almost designed like perfect by Satoshi for this day and age, because to get an under 1 terabyte drive in a solid state is actually very affordable right now. But the problem is, and so it only takes like, I think it's like a little bit over 400 gigabytes, something like that right now to sync a full node. So if you have a 1 terabyte solid state drive, you can have a full node very easily for the foreseeable future. But in Ethereum, to sync the whole Ethereum, it's impossible, because you need like over 6 terabytes of data. And then now that they're clogging it up with these JPEGs, it's like, well, of course this can't be sound money. So if you take away the aspect of looking at any of these other tokens like they're actually a sound money, an actual asset where you can store value, if you take that away, they're worthless. And so it's just crazy to me to see them being pumped up by companies like Coinbase, who are obviously shilling just so they can make money off of you trading these tokens. It's crazy. And so I was stoked to see you kind of pointing that out on Twitter the other day. It just gets annoying after a while, because people are just they don't understand market caps. They don't understand the fundamentals of the whole project, and how really secure Bitcoin is. I mean, it's been around for, 13 years now. They would have beaten it by now. They would have figured out a way to get to it, but they haven't, because it's so secure. And everyone keeps securing the protocol, the design of it. It's brilliant. So I mean, I'm one of the people from the gold industry that decided to go, wait, this is better than gold. I like my
way better.
utility precious metals that are being eaten up year over year, but my utility precious metals don't have a 12 trillion cap. You know, my
Yeah.
silver has a 1.4 trillion cap. Platinum has under 500 billion on the cap. Same thing with palladium. And these are all being eaten up to the tune of like over 70% year over year by industry. So for me, that gets me excited as something that's a store of value in the physical realm, and collectibles. Rolexes went up quite a bit over the last year, things like that, but nothing like Bitcoin. So I couldn't compete against Bitcoin, but I guess the thing I wanted to get to is the conviction level that you have. Once you understand it in the way that you do understand it, you can have conviction. And that's what you were just talking about, I think, Dylan. It's like if you have conviction in a trade, if I put $1 million on something and I get 20% off of that, I'm making $200K a year. But if somebody has $2,000 and they make 10X on it, yeah, great. You made 20 grand, but you're not making 200K, because nobody can sleep at night putting $1 million on Shiba Inu. You can't sleep at night. So, but I could sleep at night very well having $1 million on silver or $1 million on Bitcoin or wherever. I could sleep well because I have conviction in those trades. That's something that a lot of people overlook, because you'll hear these people bragging about their percentages, but they don't really have real capital to throw at this, because the people with real capital are using that conviction that you were just talking about. It's such a good point that you bring up.
Yeah, I think there's two things there. Is that one, there's a misunderstanding that there's a lot of people have a bias that Bitcoin was the first one. What are the chances that it got it right? Like, there's going to be another iteration. You still hear it today in 2021. Yeah, Bitcoin is first. It's one, but it could be MySpace. Like, okay, well, first of all, Bitcoin was not the first iteration of digital cash. Digital cash has been they tried for decades. The cypherpunks tried for decades. Cryptographers tried for decades to mint digital cash. But there was a fundamental problem, was that e-gold was another one, right? That tried to have basically digital gold, but there was a storage that they literally the feds raided because there's a centralized third party, and so that was one of the things that Satoshi figured out. Satoshi took a bunch of things, combined them together, added the difficulty adjustment, and he engineered a solution to a problem that we've had for basically millennia. Was how do we make well, not millennia, but with the advent of the digital age, how do we have an incorruptible ledger of value that is perfected truth across time and space? And so that was what he created. And two is with, when you're talking about conviction, you're 100% right. Is that when you kind of come to understand there's an absolutely scarce supply. There's a bunch of cultish, and people think cult is bad. There's a bunch of cultish maximalists that are buyers at any price and will savagely hodl everything, right? Like, I know, I literally watched tick by tick on March 13th, Bitcoin go from 8,000 to 3,700. And I looked at I refreshed Twitter, and I saw a bunch of anons on Twitter flexing how much they were down and how much more they just bought, and saying, I'm not selling a sat. And I was like, wait a second. That means that Bitcoin is literally going to go up forever, because there's literally hodlers and stackers of last resort that will ensure the thing, even if it went to $1. Like, I'm a buyer, you're a buyer. Like, maybe if it went to $1, there's something, something went wrong.
Then we're going to declare losses and rebuy real quick just to put that on that loss on the balance sheet, like you were just talking about. It's
exactly. But like, the thing is, it's never gonna. No matter if it goes down, you see technical analysis be like, "Wow, this chart looks ugly." But you have to realize there's people around the world that don't care, and they're stacking, and they're taking this free float of supply, and it's getting smaller and smaller and smaller. Like, I get happy when the price dumps. I can buy more. And so, like, there's a lot of people I know for a fact, because I talk to them all the time, that are just like me and are not going to sell for any amount of dollars, right? And so, like, this free flow of supply is continuing to go lower and lower. And that's why you need this logarithmic chart to look at the history of it. If you look at it in linear terms, it makes no sense. It's like, holy crap, what a bubble. And then it just drew down 60% in 3 months. Like, what a Ponzi. But then you look at it in log terms and you're like, oh my God, the thing's died 8 times and it's came back every single time. Like, what the hell? And you just come to realize, like, the hodlers, the stackers, the incentive structure around this thing, it's not replicable, and it's kind of this game theoretic race to accumulate. And so the only option you have when you kind of come to understand this is, I have to play. And have to play means I have to get as much as I can for my own prosperity in the future, right? Like, for my own family. Like, I don't even have the crazy thing about Bitcoin is, like, I don't have a girlfriend, I don't have a wife, I don't have kids, I don't have grandkids, but I think about passing wealth down generation to
We're lucky,
generation.
Dylan. We're lucky, you and I.
And I'm 20 years old. Like it's just like Bitcoin, and understanding that, the blockchain, this property rights ledger will outlive me. It'll 100% outlive everybody on this planet. Yeah, the only option I have is to play, and I'm going to try to, take up as much domain as I can to ensure, wealth and prosperity for my future self and generations. So like, people might think that sounds crazy, but for me, it's like, that was something that I had kind of a bunch of aha moments, and it was like, wow, like there's no other option for me. I have to do this.
So true. It's that's, I think, from a macro level is what enhanced my conviction, looking at it from a perspective of like Onramps. So like in say 2013 or something, there was like one freeway. That one freeway to get into Bitcoin was kind of like clogged up, a lot of car accidents on it, a little bit sketchy. You had like that Mount Gox thing going on. So I think of it as like one freeway, one on-ramp, one off-ramp that was just kind of sketchy. And now today it's like there's hundreds of on-ramps. There's Gemini, Coinbase, Cash App. You have now even Venmo and PayPal got forced into it. Now you got Chase is wanting to allow you to buy Bitcoin there. And then you have all of these different on-ramps, all of them much more secure, having much more easy, like cars going on and off really easily. So I look at it from that macro level, like almost comparing it to like a freeway or something, where I go like, okay, what happens when you have, instead of one freeway, you have 100 freeways, and they're all making it very easy, very accessible. Like the Cash App UI to buy Bitcoin, the workflow, they really nailed it. It's so easy to buy Bitcoin on Cash App. That's where I bought my first full coin. I had an extra money. It was back when Bitcoin was like 7,000-8,000. I'm like, you know what? I have extra. I might as well just buy a full coin. Why not? And so that was when I realized, I'm like, wait a minute. That was my onboarding moment where I just insta-buyed it by having money in Cash App. And so that scenario makes me think like, this is the on-ramp to Bitcoin is way easier than the on-ramp to gold. And gold is at a 12 trillion cap. The other thing about gold is if you ask myself or any other dealer in the country in gold, how much gold is really out there to the ounce? None of us would be surprised if it was 25 trillion. None of us would be surprised. Yeah. Be like, yeah, that makes sense. It could have been 12, could have been 25, could have been 100. Like, we don't know how many trillions of gold is out there. We just make these estimates up. But with Bitcoin, you actually know exactly how much is out there, you to the decimal point. And so that is huge to me. I was just going to ask you, like, what do you, because there's so many wildcard scenarios. If Bitcoin had a 12 trillion cap right now and matched gold right now, I wouldn't be surprised. But the fact that it's only at 1 trillion and it has this huge upside to be matching gold and then surpassing gold as the reserve asset, I think it makes a much better reserve asset than gold. And I've said that since the very beginning, and I've made videos. Like, one of my first videos I made was saying I think Peter Schiff is wrong about Bitcoin, and then I keep it as my banner on Twitter just so you at one point can debate me. It's like, yeah, you want to debate somebody actually from the precious metals business, Peter? Let's talk about it, because I posted a picture today on Twitter of all these fake gold bars. And, we test them, and obviously I get with an XRF machine, which is this fancy X-ray machine, I can see very easily. But to the untrained eye, to audit gold as an individual person to person is almost impossible, if not impossible. So as an auditing venue and the on-ramps, everything going on with Bitcoin, it is a much, much more pristine asset to have in the digital realm. And I can't trust a digital blockchain-based gold because somebody else has to be the custodian, and I don't want that. Trusting that is the definition of insanity, So, it's failed time and time again. But what do you see from like a macro level right now? That's kind of my little macro short thesis, but I was curious from a macro level, do you see like a sovereign fund coming into it? Do you see something, what do you see as a macro kind of skyrocketing thing that could happen to Bitcoin? Because there's so many different things that can happen here.
Yeah, I think digital gold is like a good kind of, first level, like intro someone to, hey, this thing holds some value, 10 trillion, there's some upside, that's 500,000 per Bitcoin. But ultimately, I think like the absolute most bearish case I can ever think of is digital gold, in the sense that like it's a pet rock. People don't do anything with it. It just sits and stores value. But ultimately, I think like, Bitcoin will be worth, dollar denominations are tough because, what's the reliability of it? But I think in today's dollars, Bitcoin is a 200, $300 trillion asset, just because of what basically an energy currency means for the world, what that kind of, how that looks, how it bootstraps I think it's just like, it's hard to imagine something being that valuable. It's like, oh my God, 50% of the world's wealth in this digital currency. But wait, I mean, when you think about the UTXO set, right? It's something that can't be replicated. Bitcoin is the most, distributed UTXO set, digital property in the world. And so we're not only talking about the on-ramps, but think about all the stakeholders in this system, right? Anybody that has any Bitcoin. I think there's, like, in terms of UTXOs, and any, anybody can have a bunch of UTXOs. I think I have 50, maybe 100. But there's like 120 million UTXOs on the Bitcoin network. So in terms of replication, it can't happen. But there's all these different stakeholders around the world that are financially committed and motivated to protecting this thing and building it and growing it. And so that kind of feedback loop, and what that means, what Bitcoin means for the energy industry, right? So, like, you're just starting to see energy companies start to dabble their toes. Like, not only is this a financial revolution, but I would argue the bigger revolution is the energy revolution. You now have this global incentive for any sort of waste energy on the planet to basically be consumed by a buyer of last resort to secure a global monetary network. How valuable is that? I would say at the very least, that's worth 10 trillion. An energy buyer of last resort, a load balancer for all of humanity's grid capacity. Like, what is that worth? So there's all these different lenses to kind of view it. But I would say the sovereigns are all coming. The banks are all coming. The energy producers are all coming. The plebs, the individuals are all coming slowly. Information, the asymmetry is still extremely strong. But I think the bull case is Bitcoin is, 10, 20, maybe not 10, but 20, 30 years from now, one Bitcoin has the buying power of 10 to $15 million. And I think that will just increase relative to the productivity of the world, in terms of everything getting cheaper on a per Bitcoin basis. Keys will be lost. Bitcoin will become, I guess, deflationary in nature, if you want to think of it like that. And that's not a bad thing. People think of deflation and they think bad, because all they know of deflation is fiat fractional reserve credit contraction and what that does. It's bad for an economy. No, it's bad for a levered economy built on fractional reserve banking. Deflation, by the means of productivity decreasing prices, is good. It's very good. But a lot of people can't differentiate that. And so they think, oh, deflationary money, bad. No. So yeah, I think, long-winded answer, but I think, $200, $300 trillion in today's value is my bull case. And honestly, I don't plan on really selling, except for maybe an occasional capital loss, and harvesting that until they fix up that loophole, until hyper Bitcoinization, and I can use Bitcoin as my medium of exchange with no taxes.
So bearish, man. So bearish. Only 300 trillion. What? Come on, Dylan. You gotta pump those. Those are rookie numbers right there, man. No, I'm kidding. But the deflation thing, it's like, what's scarier than deflation? The current situation where wages are the same and wages are deflationary, but the currency you're paid in is inflationary. Now that's a scary scenario, and that's what we have right now. You're being paid in something diluted, and you're making the same or less. Like, that is absolutely the most crazy thing ever, is what we currently have. So the idea of thinking, oh, well, if the money supply was deflationary, that would be a bad thing. It's like, really? You can buy more with the money that you have? Like, that's a bad thing? Okay, sure. I think it's such a great point that you bring up, really, man. The other thing I want to talk about was the miners, from a macro level, is the fact that they're holding Bitcoin on the balance sheets. Is there anything that you wanted to talk about with the current situation with miners? Because it goes into the energy conversation too. Like, I actually just got asked this by this person I've been hanging out with, and was the conversation she said was, isn't it bad for the environment? Isn't Bitcoin bad for the environment? And my answer was no, it incentivizes its growth. Why are we talking on an iPhone? Is because of this iPhone. Why is this iPhone $1,000? Because people were competing and they made this great phone and they competed with each other. So with energy, it's like almost you're going to see this competition going on. I was curious, like, how do you feel about the miners? They're holding Bitcoin on their balance sheet. So in the gold business, they mine gold and then they dump it immediately. They don't mine gold and go, oh, I'm so bullish on gold, I'm going to go throw it on the shelves and we're going to hang on to what we mined. No, Barrick Gold and all these companies mining worldwide, they mine and they dump it immediately on the market. These Bitcoin miners are mining, but holding the Bitcoin. And not only that, but they're expanding their operations, tapping into the markets. I mean, that is just a huge thing to me. I was just curious, like, what's your whole thoughts on the energy debate and current miners and everything like that?
Yeah, I mean, that's a great point. When I was listening to Michael Saylor debate that gold guy, I think like Frank something, that was one of the most savage takedowns I've seen. Is like, he's like, so you're talking about investing in gold and investing in gold mining. Well, why doesn't any gold miners hold gold in their balance sheet? They not only sell and pay taxes on the gold, but then they distribute the profits in dollars in dividends and pay taxes on the dividend. So he's like, so why don't they just hold the damn gold? And I think, when you're seeing Bitcoin miners partner with banks, Fed member banks who have access to the Fed window, and they're borrowing, Marathon has a $100 million credit line with Silvergate. Silvergate is a Fed member bank. So they're saying, hey, here's Bitcoin. We're going to collateralize it at any point. We want dollar liquidity, and we're going to get it, and we're going to incur no capital gains, and we're going to get this dollar liquidity at like a 3% or 5% or whatever it is rate. Extremely bullish, right? So like, in the early days, Bitcoin miners had to liquidate. There was no financing their Bitcoin. And so something like that is really bullish. And I think in terms of the energy argument, it's straight up, it's obviously a lot of nuance, and it's hard for the average person to kind of understand when they say, hey, Bitcoin uses as much as the Netherlands or whatever it is, right? But one, it's like the Bitcoin network is the most, for energy consumption, it's like the easiest thing to quantify in the world, right? It's like all math, it's all verifiable, it's right there. But two is that like human productivity or human flourishing is like a derivative of our energy consumption and production, right? Like there's a reason that we're talking over this Zoom call and not living in a cave. And it's because we found a way to harness energy and different sources of energy in the most efficient and productive ways possible. And so when anybody is arguing against energy consumption, whether that's like for Bitcoin mining or that's like, World Economic Forum sponsored propaganda saying, don't eat meat and live in your pod, like this stuff, it's like anti-human, it's anti-progress. And so ultimately I think it's like, it's naive at worst, at best, and malicious at worst, the energy convo. I think for the most part it's naive. But yeah, I mean, Bitcoin, I hope the Bitcoin network consumes 1,000x as much energy as it does today in a decade from now. Like the more energy that Bitcoin network consumes, maybe not consumes, but I guess, yeah, consumes. The more energy that is produced to power the Bitcoin network, the more prosperous humanity will become. So that's kind of, and there's a lot packed into that. People might listen to that clip of me right there and be like, this guy's just out of his mind. But, there's a lot that kind of comes into that.
You see it clear,
and
bro.
Yeah, that's kind of what I believe. And so, I hope the Bitcoin network continues to consume a lot of energy, and I hope humanity, Earth, we become the most energy efficient civilization, physically possible.
Absolutely. It's what better thing could we all the things we waste energy on in this world. What better thing could we waste energy on right now than preserving the monetary supply, like preserving what we use to value our time? Like they're stealing our time from us by printing all of this money. We're working some people might give up 60 hours a week, to whatever it is. That's 240 hours a month you're giving up. And you're getting paid in an instrument of measure that is being diluted by them. So you're essentially giving up your time. If they inflated the monetary supply by 40% in a year, then yeah, we're giving our time away or getting it stolen from us. So what better thing of all the things we're wasting energy on? And that includes their Fedwire system. I believe their Fedwire system uses more energy than the Bitcoin network. So, and that actually can fall. I remember when the Fedwire system was down for a day, and I was like thinking to myself, that really was overlooked. Like I've never seen Bitcoin down for a day, but their Fedwire system, we just believe that. I don't. You remember when that happened? I think I was like, what was it? Maybe a year ago or something, 8 months ago. And they're just like, yeah, we're down for a day. It's like, wait. We all rely on you for our monetary system, and you can just be down for a day and say whatever about it. Like, no, that's not okay. So for me, I totally agree with you, man. It's like this conversation around energy, but the thing that scares me is this person I was talking to. She's so new to it so that she's like trying to learn more and more about it. But these are the things that she's been told is, oh, what about Ethereum? What about these other coins? I can afford more of them. So you got the unit bias. And then on top of it, then you have this energy situation because that's what's being told by Elizabeth Warren and these individuals that want to get votes or whatnot. And it's all lies. And what's so beautiful is that we're able to have conversations like this and post it on YouTube where people that really want to seek this information out can get the truth. The truth is it's the most important thing to be putting our energy because it fixes the world. I couldn't agree more with you on that. In regards to miners, like accumulating more Bitcoin with the on-chain analytics and stuff that you're seeing on-chain, if you wanted to talk about that a little bit, do you see a situation where more people are accumulating right now, but more miners are holding it on their balance sheet? You see them unloading a little bit of it. What do you see right now on that perspective?
Yeah, I would just say like, some of the stuff, Glassnode has a great suite of tools, and they have like miner balance and stuff. And I think it's a little flawed because, I could mine some Bitcoin and send it from wallet to wallet. And, for the most part, it's maybe not an economic exchange, but the metric would say, hey, that miner, dished off some Bitcoin. So I don't look at miner balance too much, but from mining profitability standpoint, what you can look at is like hash price. So I'm looking at miner revenue per day divided by hash rate. And so basically with the recent, move over last year to 60,000, and obviously some bumps along the road, but hash rate, and with the stuff that happened in China, like on a per hash basis, miners are 4x more profitable than they were a year ago. So these miners are absolutely churning in the money right now. And if you're mining Bitcoin, you're giga bullish on Bitcoin. You're not selling anything. Anybody that's mining Bitcoin understands Bitcoin at a very high level, and they don't want to sell any of it, or as little as possible. So, I think for Bitcoin mining right now, it's fantastic. And I think just with all the supply chain disruptions and everything, you're not going to be able to see that hash rate. You're going to see hash rate rise, but you're not going to see it keep up with, in my opinion, with price over the next 6, 12, maybe 18 months. So it's a great time to be a miner. And the good thing is that reduces sell pressure. And ultimately over the long term, what you'll see is that any profit incentive that, mining Bitcoin comes with, you'll see that not erode away, but you'll see more and more ASICs come on. You'll see hash rate rise. You'll see difficulty ramp up, and you'll see that essentially the production cost of Bitcoin continue to rise, continue to ratchet up. So these margins for Bitcoin miners, some miners are mining with literally no cost. Like they're taking excess energy from an oil and gas operation, and the oil and gas operation sometimes pays them to take it. So maybe a negative cost of power, but for the most part, I know people that have some miners plugged in. I plan on plugging in some miners in my basement this winter and heating the house a little bit with it. Right. So that's an economic use, but for the most part, anybody can plug in ASICs right now and you're pretty profitable. That won't last forever. And eventually it'll be, I think, almost a commoditized business, but we're a long way away from that, right? Difficulty is going to increase by orders of magnitude as there's more and more incentive to mine Bitcoin, and hash rate will increase by, just as much. And so, I think it's still really, really early. Bitcoin mining is still so niche, but eventually every single grid will have Bitcoin mining. Every single energy producer will be Bitcoin mining. Saudi Aramco and the Saudis and Putin and Russia and even China, they'll all be mining Bitcoin. I think it eventually will go nuclear. And so even today, it's still super, super early. But yeah, I think that's from a sense of what I'm seeing on chain. Just miners are extremely profitable, and it's going to be really hard to it's really hard to source ASICs and rack space right now. So for anyone that is plugged in, you're doing quite well.
Yeah, that was the next question I wanted to ask you, is because from a small perspective, like say you wanted to be $100 million, mining company, or you just had $100 million on your balance sheet. I wanted to ask you this question specifically because I'm a bit conflicted with it. If you had 100 million on your balance sheet right now, liquid in fiat, in dollars, how would you spend it if you were given the options of going, I can buy Bitcoin straight up, hold it on my own cold storage, I can go into some ETF, or I can go into Bitcoin mining, I can do this, maybe I buy Bitcoin, I leverage it. Like, what would you do if you were given $100 million right now to invest in Bitcoin and or the system around it? Just kind of curious.
Yeah, I would say for the most part, just buy spot Bitcoin and chill. I'm really bullish on Bitcoin mining, but in terms of Bitcoin miners, if you're trying to buy publicly traded miners, I think one of the most profitable things to do right now is, if you can, is you have a bunch of ASICs, you spin them up, you have this, you get a facility, and then you go public and you access these public capital markets, and essentially because of the manipulated cost of capital and all the things we talked about early in the episode, these miners, they have $100 million of Bitcoin on their balance sheet. They produce, just estimate $30 million of Bitcoin a year. You can do the Bitcoin denominations if you want, but the market cap's like 1.2 billion or something, right? Because of these huge equity premiums that every asset on the planet is trading with, right? The PE ratio of the S&P or NASDAQ's like 25 or 30. And so like, if you can plug in the miners and you can access these ridiculous capital markets, like do it, because you're going to take, a couple $100 million of equipment and Bitcoin on your balance sheet, and you're going to turn it into a $1.5 billion valuation, which is why I'm not going super long into Bitcoin miners, publicly traded ones. I bought a little bit in July when the hash rate all from China sent off, and the valuations were very beat up. And it's more of like a speculative bull market kind of, you know, uh, trade. Maybe not like a long-term investment, but I think that even with taxes, I think a lot of these might outperform over the short term. But that's just a speculation. If I had 100 million, I would be buying Bitcoin, and I would be taking, probably a percentage of that, and I would be going to some, custodian or NYDIG or whatever, and I would probably borrow a little bit more and buy some Bitcoin. Or I would be seeing if anyone wants to give
I
seeing
love
if
it.
someone wants to give me like 500 million at 6% for 6 years, like Michael Saylor, and I would buy more. But yeah, I mean, I think just you can't go wrong with spot, and a lot of people try to outsmart the room, but it's going to be extremely hard to outperform Bitcoin over the next 10 years, and that's kind of the beauty of it all.
It's like you see it the same way as Sailor, Dylan, because that's what he's done. It's like he went for the solvency first, whereas some people are putting themselves to be a little bit insolvent to leverage and then get more like, miners and whatnot. But he just went and leveraged himself to have the actual asset itself and just keep accumulating more and more and more of that. I guess with MicroStrategy is, I'm wondering, like, because they're trading at, you look at these miners that are trading at like these 6-7x ratios to their Bitcoin positions, right? Like, so if they have a million in Bitcoin, they're trading at 700 million or whatever, 600 million, but they only have 100 million in Bitcoin. Michael Saylor's company is not even a 2x of their Bitcoin position. Their Bitcoin position's around, like, I think somewhere in that like 6 billion range, with the company at somewhere around 7 billion-ish. So it's like they're not even a 2x. It's like a 1.1x compared to their asset on hand with Bitcoin. Now they leverage themselves to get that Bitcoin, but they still have the real asset on the balance sheet versus the miners, which is crazy. I was just curious, like, why hasn't Saylor gotten involved in mining to get that, what you just talked about, to tap into the capital markets and then increase his valuation 7x, 6x?
I think it's quite hard to just kind of like, these large scale operations. There's a lot of expertise to plugging these things in, like sourcing the power, these facilities, plugging them in, finding the rack space. I mean, I think there's a lot of ASICs right now that are just looking for rack space, right? Like they all got uprooted from China, and there's like, and the people in the United States and North America are like, we can't even take them. Like we're building our own facilities out right now. So it's, there's a good barrier to entry there, and like, the people, I think, especially as Bitcoin continues to go parabolic, you're going to have a lot of, maybe not dumb money, but you're going to have a lot of people try to capture this outrageous opportunity that is Bitcoin mining and these huge margins. And they're going to get wrecked because they over leverage themselves, and Bitcoin difficulty racks up and continues to just keep pumping while the price maybe stagnates or falls. Like that's what you saw after 2017. You saw right now, it was like, compared to 2017, it's like 10x more profitable at the top to mine than it was today on a dollar per hash basis. And what you saw after that is the price drew down 80%, but difficulty and hash rate kept pumping. So it was like it was getting more and more competitive to get a marginal unit of Bitcoin as the price was plummeting. So any inefficient miners just got wiped. And it's just like it's like the most, capitalistic, Darwinistic kind of competition, right? Just like literally a probabilistic race to mine Bitcoin. It's like, it's pretty beautiful in that sense, but any kind of, miner that's not efficient or isn't doing things right is going to get wiped out. And so we're not at that phase of the market yet, but I think we do see that. And so, someone like MicroStrategy, I think they know their expertise. We sell business intelligence software, we buy Bitcoin. And then even then, what we're talking about with equity multiples, right? Michael Saylor, he filed $1 billion, they came out with $1 billion facility, and he says at any time we can sell MicroStrategy stock into the open market. And just, I think a couple months ago, they sold 180, they didn't tell anybody, they sold $180 million of their shares, and they bought Bitcoin. So on a per share basis, they increased their Satoshi stack, and they diluted their equity. And so like that went over a lot of people's heads. But what is Michael Saylor screaming? He's saying our equity is overvalued, the PE ratio is outrageous, and we're underweight Bitcoin, even though our entire balance sheet's on it. And so like he's just harvesting this huge equity multiple. And I think that's that's kind of one of the things that, like, if I had access to a business in public capital markets, like, I would dilute my own shares to buy more Bitcoin. But I obviously, don't have that access. So, he's ahead of the curve. He's going to continue to leverage his balance sheet every time Bitcoin draws down. And I think that MicroStrategy stock, maybe minus the capital gains and the ability to self-custody it and move it around the world, MicroStrategy stock is maybe one of the best assets to own besides Bitcoin.
What's crazy is like nobody's talking about it right now, but Tesla just blew up over $1 trillion on their balance, like on their market cap. Like, so their market cap is ridiculously overvalued right now for how much money they make off of cars. It's like, dude, he could easily take his balance sheet and put 10 billion into Bitcoin right now. He could easily do a secondary, come up with another $30 billion, and then just boom, go and buy 10, 20 billion worth of Bitcoin. And what did it do last time when they just bought 1.5? That was, people can say it's what didn't cause it, but it was a major catalyst, I think, to that last run up. When they got into it and put, like, because that was front page news everywhere. Tesla buys Bitcoin and they have 1.5 billion worth of Bitcoin or whatever. And from what I know is they still are holding it, except for a small amount that they tested the solvency of it or whatever their reasoning for it was. But Elon could do that. Like, he could do a secondary, get a bunch of money together. And I think he already has like 12 billion, 13 billion he's not doing anything with right now on their balance sheet with Tesla. But man, it's funny, the way you just described that with Michael Saylor and MicroStrategy just reminded me. I'm like, Tesla, a lot of these companies are very overvalued and they know it, And
yeah, so, I tweeted the other day, and it was like, I obviously knew he wasn't going to respond, but I was like, hey, Elon Musk, the Tesla's valuation is looking a little outrageous at 15 million Bitcoin. You should dilute what to do, dilute your equity and buy some. And like, I know that Elon's not seeing that, and I got a bunch of Tesla like fanboys like upset in my mentions. I'm like, listen, I am not sure about a lot of things, but what I do know is Tesla is not worth 15 million Bitcoin. I can guarantee you. And so, yeah, I mean, if I was a executive, I would be doing it. I think if they tried to buy 30 billion worth, they would find very quickly that they're even a $1 trillion asset. There is not that much liquidity. But yeah, I mean, it's the rational thing to do for every publicly traded CEO and executive. And, Michael Saylor, I think we overestimated how far ahead of the curve he is compared to everybody, right? Like, I expected more of the Squares, the Teslas, like, hey, 1-2% position, 5% position. He was like, nope, Bitcoin standard. We're going to speculative attack the dollar. We're going to sell convertible shares. We're going to dilute our equity. Like, I mean, the man's living in 2025, but I'm here for it. And I expect, there will be followers, but we'll see how long it takes.
Yeah. How do you see like the fiat basket in a way? Cause they always say that narrative of, oh, well, the dollar's the cleanest shirt in the dirty hamper. I hear that line all the time. Right. And it's like, what if we want a clean shirt? And the whole hamper just dies at the same time and goes down at the same time, with the dollar being the strongest of all of them going down in value. I like the thesis that you had brought up earlier, that you think the dollar will be around, and you hope the dollar will be around for the next 20, 30 years maybe. But a lot of people tend to think that we're going to get hyper Bitcoinized like in the next 5 years. I actually am excited to play that arbitrage type opportunity of leveraging my Bitcoin, getting a ton of fiat against my Bitcoin as it goes up in value, and then using that fiat to play hot potato with. I always call dollars, like in my business, it's hot potato money. Like, I'm like, oh, buy that, sell that, buy that, sell that. Like, it's all hot potato money to me. And I get excited about using that opportunity because I don't see Bitcoin as a hot potato money. So I want it to be around, kind of like you are saying, that it's a hot potato. So like, how do you think it plays out in the next, say, 5-10 years with hyper Bitcoinization versus fiat currencies?
Yeah, I think the dollar is the strongest of them all, like you kind of said, just being the world reserve currency. A lot of people don't really understand the debt dynamics of the dollar and the world reserve currency, and just how much dollar denominated debt there is out there. Like, essentially the Fed and other global central banks, but there's so much dollar denominated debt that anytime there's like a dollar short squeeze, you can think of it as 2008, 2020, you see the DXY, the Dixie. It's basically the dollar against a basket of fiats. It super spikes, and essentially every asset sells off, Bitcoin included, stocks, equity, stocks, real estate, bonds, whatever, because there is a bid on the denominator, which is the dollar. There's in a fractional reserve system. As defaults are occurring, it's a game of musical chairs, and the music stops, and everybody's screaming, trying to get this dollar to pay off their liabilities because they have to. And so I think that the end game is when you kind of see this dollar squeeze happen. with the dollar appreciating against all fiats at the same time where you see Bitcoin pumping. And so like, the macro correlations, I don't think go away soon. Where like if the dollar bids really, really hard, Bitcoin will sell off, and that's fine because it's just a globally liquid monetary asset. That's expected. But eventually, with the credit markets and the deteriorating credit quality of all debt in the world, of all fiat instruments, I think eventually we will see a day where the dollar's pumping, all fiats are collapsing, and Bitcoin is pumping against the dollar. And I think that's kind of the end game. Does that come in 5 years, 10, 15? That's anybody's guess, but I would tend to think sooner than later, probably within this decade.
It's a great answer, man. Last question I had for you, because I know I've taken a lot of your time and I appreciate it, man.
Of course.
If you're talking to somebody, because a lot of my audience, I've been telling people in the precious metals community that it doesn't need to be this headbutting match between gold and Bitcoin, but there's really a $900 trillion basket of assets out there. Whereas if you put all the precious metals, including gold, in this precious metals basket, platinum, palladium, silver, gold, rhodium, all of them, and then you put Bitcoin in there too, you're talking around 15 trillion or less. And it's like, so to make it like this headbutting match, like Peter Schiff has done to like make it so that people don't want to get off zero within the gold business or holding gold, I think it's a big disservice to people, because they could have gotten off of zero like I did about a year and a half ago, and now Bitcoin's just went. It's like Bitcoin will be 90% of your balance sheet, whether you like it or not, almost in a way. And so if you bought into the idea of it being an insurance policy, like Chamath Paul Habatias had said, that's kind of one of the first people I listened to with Bitcoin and bought as an insurance play. We're now Bitcoiners in a way because we have so much invested in it, So it's like if you were in that insurance basket, now all of a sudden now you're really taking it very serious. Like, what would you say to somebody rather than this headbutting match in a way? Because I'm not really big on gold. I'm more big on the other metals. But if you're somebody's in the silver investment space, and you're trying to get them off zero. You're trying to get them to understand Bitcoin on a very basic level and say, hey, this is how you get 5-10% of Bitcoin on your balance sheet. Like, how would you break it down for that person to get off of zero Bitcoin?
Yeah, I would just say at this point in 2021, with Bitcoin at $1 trillion asset class, I think it's irresponsible, especially when you're looking at risk-adjusted returns. If you want to think of dollar returns, it's the best performing asset of all time. It's also risk adjusted over most time frames, the best performer. And if Bitcoin's volatile, yes, it is. But volatility is your friend. And when you're looking at risk adjusted returns, whether it's annualized or compound annual growth rate, and you divide it by the volatility, risk adjusted, it's still the best performer. And so at this point, it's irresponsible to be sitting on zero Bitcoin position. So you don't have to be you don't have to be a maximalist, evangelist, cultish Bitcoiner, but you should 100%. It's irresponsible to not have at least a 1 to 2%. I would say almost 5% position today, and let it ride. Right, like the key is buy 5%, buy 3% if that's what you're comfortable with. If you can't stand a 40% drawdown with more than 5% of your portfolio, then don't. But never rebalance. Right, like buy the 5% and ride it. You don't sell your winners. And so. I think anybody that takes a 5% allocation today will be sitting, at 75, 80, 90% of their net worth in Bitcoin a decade from now, and maybe probably a lot more. And so I think, anybody that's done that over the course of the last decade or, 11, 12 years is doing extremely well. And I think that's not something that changes, even though, like during the monetization process, which we're still in, the upside is tremendous. Obviously, there's not the 1 billion% gains left anymore. But it's still very, very early, despite it being so massive.
It's very well said. It's truly foolish to have none, and so that's something that I'm trying to spread as a message in the precious metals community. I'm trying to be that niche of not being a Peter Schiff and being like, because the funny thing is the people in precious metals, they're all libertarians. Like they have this mindset. So they're like, these are your friends, like you want to teach your friends and say, hey, look, it's skeptical. You can be skeptical about it. Yeah, this is a crazy internet thing, and you might not understand the way the blockchain works with Bitcoin and how to build a node, how to do cold storage. But to not have a 5-10% position in Bitcoin doing yourself a big disservice. And it will eventually, I mean, my 5% turned into 10%, turned into 20, 30, 40, 50%, now even more higher than that. And I keep adding and adding. I've never sold a Satoshi. And I came from that audience of listening to Chamath on a CNBC interview go, you know, I think called it schmuck insurance or something like that. I'm like, oh, I'm a schmuck myself. I might as well get some insurance against myself, you know, so I'll get that. And, you know, so I got this insurance play. And turns out it worked. And that was back when it was around 7,000-8,000 was when I first started really scaling in. And then now it's, you know, gone up more than 6x of what I bought in, 6-7x. No, so it's like, of course I feel, you know, bullish about Bitcoin, but now I'm invested. So now I'm learning about the ecosystem, learning nodes, learning cold storage, learning all these things. So getting off zero is just such a huge thing. And it's hard because the community tends to be like, you're either all in on Bitcoin or you're not in Bitcoin at all. And to somebody that has none, they're going to look at you and be like a Ray Dalio or like a Paul Tudor Jones or somebody that's in metals or something like that, or even somebody that has a Rolex collection or whatever. They're going to look at people and go, put 100% of my net worth in Bitcoin right now. Like, okay, this person's a little crazy. But to get them off zero until they learn more about it and get them, you know, have some skin in the game, it changes the game for them. That's why I kind of wanted to get your perspective on that. And I appreciate the way you simplify things and break it down for everybody to listen to. Dylan, where can people find you? I'm going to put your Twitter handle down in the bio. So if you're not following Dylan on Twitter, I think you're doing yourself a disservice because he posts great stuff every single day on Twitter. So really go follow Dylan on Twitter. It's going to be in the bio down there in the description. But where else can people find you, Dylan, or anything else that you wanted to bring up?
Yeah, Rob, I mean, I really appreciate you having me on. This has been a lot of fun. You can find me on Twitter at @DylanLeClair_. I work for Bitcoin Magazine. I do their like premium financial market products. So we put out like 20 pieces a month and a monthly report. There is like, you know, there's public or I guess like public and premium tiers there. So we put out stuff to the general public, but we do daily stuff as well, which is like all the on-chain stuff, which I find fascinating, in derivative markets and just kind of the stuff around Bitcoin. If you want a deeper dive there, and I can like, I'll send you a link for like a discount code or whatever. If your audience wants to check any of that out, I can hook you up with a sub as well. But yeah, I mean, that's where you can find me. You know, just reach out over DMs on Twitter. Sometimes they get flooded, but for the most part, I try to respond to everybody, and it's awesome engaging with the community and hopping in spaces and just like, you know, meeting people like yourself. I mean, there's nothing else that can compare to what we have here. So, you know, it's awesome living the dream. And, you know, again, really appreciate you having me on here.
Yeah, you're an inspiration for somebody that's in like you and Will and all these people that are, you know, 19, 20 years old, to show the people around you like, hey, this is the future and I want to be part of this ecosystem. I'm doing everything I can to be part of the Bitcoin system here and the community around it. It's inspiring to people. And your story also is very inspiring as well, because you're talking about how you worked manual labor and got into Bitcoin. And just that's something that more people need to hear, is your story specifically, Dylan. So I'm stoked that you came on. And if you're not following Dylan, and check out all of his, you're going to send me some links to put down in the description down below. So make sure to check out all those links in the description, guys. And thanks again, Dylan. Really appreciate you coming on, man.
Appreciate it, Rob. I'll see you around the Twitter sphere, man.
See you.